Okay, if you are anything like myself, you don't like thinking about property taxes, let alone reading about them, and you're not going to remember what you read in 10 minutes anyway. So I am going to break this down for you in the simplest and easiest to remember form that I can. Picture book style. Hey everyone. Did I just wink? Once upon a time, this little piggy decided to go to market, this little piggy decided to rent, and this little piggy bought a house and then said, taxes! Yay, Texas, no income tax! But then there's that pesky little property tax issue. In order to understand how property taxes work, you have to understand three elements: market value, assessed value, and property tax rate. Market value is what your home is worth. Basically, if you sold it today, what you would list it for. This number is reached by comparative market analysis or an appraisal. Assessed value is what the county that you're living in, more specifically the county's appraisal district, decides that it's worth. This number is reached when assessors look at comparable homes, improvements on the property, and rebuilding costs, and they usually use a computerized assessment as a jumping off point. The assessed value is commonly lower than the market value. Lastly, property tax rate. How do they come up with this number, right? It's actually comprised of several jurisdiction tax rates, so taxing units like school districts, counties, cities, junior colleges, special purpose districts, etc. decide how much money they need to be able to pay for providing public services, and property tax rates are set according to the sum of those budgets. Then your assessed value is multiplied by this rate in order to equal your property taxes. For example, your assessed value is $250,000 and the tax rate is 2.5%. You multiply the two together and your taxes for the year are $6,250. I know, seems kind of high, right? Don't fret. This system is why there are several exemptions in place that you may very well qualify for. These exemptions will lessen the total of your assessed value, thereby lowering your property taxes. Let's look at a couple examples. Example 1. If you're the homeowner, not a renter or investor, and the home is your primary residence, you were living there on or before January 1st, the address on your driver's license matches the home address, you most likely qualify for the Homestead Exemption. Once you file for this exemption, it can take up to 20% off of the assessed value, and you only have to file it once. It will stay with the home until you sell it or remove it. Check your county website for the filing deadline. Keep in mind, there are scammers afoot who will send you stuff in the mail and try to get money out of you. You don't need them. You can file yourself and it is absolutely free. Example 2. If you are 65 and older or disabled, it's probably not fair that you're paying for some of the public use taxes that you're, not using. So there are exemptions in place to lower your assessed value for that reason. Be sure to check your county website or with your tax professional for all the exceptions you might qualify for. Remember, you also have the ability to protest the assessed value. Once you receive your notice of appraisal with both the market value and assessed value, you can either hire a company to protest it for you, or you can have a CMA done by a realtor and fill out an application, then go to an informal hearing to settle the case, followed by a formal hearing if you're unable to reach an agreement. Check out the description below for more information on everything that I talked about. And that, my dears, is the end of this sad and crappy fairy tale with silver lining. I know, right? I can't imagine why Disney hasn't picked us up yet. Won't even return my calls.